Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. Let's see. We have the government taking aim at big tech. So we'll talk about the big red candle we had yesterday in that sector and what that means for today's session. We're going to talk about Uber actually has a couple of headlines. First off, the analyst quiet period is over this morning. And also news broke about an hour or so ago that the IRS is looking into their filings from a couple of years ago. So we'll talk Uber on our show. We'll talk earnings from BOX and TIF and a couple others. And today's guest, Nick Chahine, joins us every other Tuesday as the author of Create Income with Option Spreads. He'll be on at 8:35. Joel, what is the word here overnight?
Major green on the screen after that crazy day yesterday. We're trading up 16 and a half handles at 27.66. That's above Monday's high. Friday's intraday high right there at 69.50. So let's call that 27.70 your next hurdle. On the downside, these are like the hardest days, like where to get long here. Yesterday's high comes in, as I said, 63.75. Think you'll get a shot at that. Mid-range on the session comes in at 27.57. Crude in trouble here again, down 49 cents at 52.43. Maybe take a look at yesterday's low at 52.11. Gold continues to move higher, up 60 cents at 13.28.5. Silver, wake up, silver, down almost a dime here at down 3 cents here at 14.71. Bitcoin loses a bid here. Now we're down $687.50. These are the futures at 7,925 here. Nice slow morning, nice quiet rally. You just must be taking it easy.
Oh, yeah, just taking it on easy street. I get up for 4 minutes to go to the bathroom and change my shirt because I wanted to put a nicer shirt on for the show. And that's right when the S&Ps decide to rally like 7 handles in 7 seconds. So I come back and I look at my screen. It's like, sold. And I was like,
How many?
I got picked off.
How many?
I don't know. There was at least it looked like about 15 to 20 sales in there, so I could go out them up. But I mean, because I'm doing obviously, stat arb, I'm doing index arb, and if you're doing index arb, and all of a sudden the S&Ps move 7, and you're not at your desk, that's a recipe to sell a lot of stuff and get picked off. So, anyways, actually a few of the sales were okay. Some of them were a little bit higher. I sold some applied materials higher too, but it's when you're doing this type of stuff, you got to monitor it, and even leaving your desk for 4 minutes can sometimes be a little bit costly.
Okay. All right. Well,
not only that, it's usually I would be doing the picking off. So, that was an expensive P.
Did you get out of longs, or did you end up short on some stuff?
No, I was just selling longs mostly.
Good. Okay.
So, just from last night, but that wasn't good because I'm selling them probably below fair value because that's why I'm getting picked off. So, we know I've talked about the fair value trades, and I do all kinds of different styles of trading, but usually in the morning and pre-market, I'm doing index arb, really. So, all of a sudden your index takes off and, you got a bunch of stocks offered out there, you're going to get picked off. So it happens. You got to move them around. You got to keep moving those orders for the movement. It's a little bit of a dangerous market environment right now, especially, when you're not a high frequency trader to be able to do all this stuff in the blink of an eye. So you do risk getting picked off every once in a while.
And boy, oh boy, we are so far off the low. I mean, I was at my computer at like 340, 345 yesterday, and I'm like, it's choppy here. I'm gonna step away. Now, didn't pay a lot of attention to the close, and then boom. I mean, they just rallied this thing. Let's see here. Where did we? Yeah, I'm looking at the low. The low was made yesterday at 1545. We hit 2875, and then bang, right up here at 2770 here. So big old move in the market. Really important for the market hold the gains today. I'd really like to see us hold in there and not give this back. But we got a long way to go to see if that happens.
Yeah, and obviously lots of action here. But just looking over and just, taking back and kind of, maybe we should stop and look at the carnage a little bit here, because there's no better word for it than carnage, especially when I look at my long-term portfolio. I'm like, holy, this has been an awful month that keeps getting more awful. CNBC was kind of saying, oh, it was a decent bounce back day for the market yesterday because they see that the Dow traded higher. But when you look under the hood, there was stocks that were absolutely destroyed yesterday. Yeah, we know Coca-Cola went up yesterday. Yeah, we know some of the defensive names held on okay. But holy cow, Google losing, what was it, $70. Amazon was down 100 points. You had the Qs down over 2%. So the entire index down significantly there. It was, Facebook, talk about Facebook. I have some of that in the long-term portfolio. Awful. So you can sugarcoat it all you want and say, oh, the Dow was up as a decent bounce back day, but that's not looking under the hood. Yesterday was awful day if you were a tech investor. Awful.
And that Google, I was just kind of like tongue in cheek and saying, hey, let's wait for 1,000, right? And boy, they came in on the open. They hit that thing. What was the low from? Didn't quite get to 1,000. Oh, look at that. We got to 1025. So from that 1103.63 close, and you know who participated in the downside on that yesterday?
Who's that?
I'll give you one guess. Who would short into a gap down like that?
Probably Jeremy Newsom.
Yep.
Was it?
Yep. Yep.
Jeremy goes with the flow. You know what? I was looking. He had a good day yesterday. He was posting. That Jeremy Newsom, he's got some guts out there for sure.
Yep.
Swing trading, he's going to be there with us on June 20th there. So join us in New York, because I'm excited to watch Jeremy too, because you know what? As good as I am, and I feel like I'm a pretty good trader in the very, very short term, like day trader / scalper / I can kind of get a feel for what's happening in the next 30 seconds. He's very good at like that swing day trading, like holding on to trades for a few hours. He's very good at that time frame, and that's a sweet spot to be in. It's a time frame that I probably should, I don't focus on that time frame, but I'd like to learn more about that time frame. I mean, I think I do okay job there, but 98, maybe even 99% of my trades are in a much shorter time frame. So that's going to be the nice thing when we're out there. We'll get traders trading different time frames for you. We'll get some longer term perspectives. It's going to be good.
Great point, because I was just thinking, about he can also do it off like the 1 and the 3 minute chart, which, man, I get nervous looking at those charts. But then we're going to have someone like Anne-Marie Band. And I did a webinar with her a couple weeks ago, and literally for her trading, she pulled up a weekly chart, Dennis, a weekly chart, and said, these are my levels for the week. This is what I'm waiting for.
Longer term perspective.
Yeah. So we're going to have, the gap traders and Jeremy. You're going to have Anne-Marie, a little bit more swing. Kenny, with his VWAP, Kenny Glick at hitthebid.com. Then also in the afternoon, Todd Gordon, a little bit more, longer.
Technical, a little longer term.
Yep. And then Christian Fromhertz, who, as we put a lot of emphasis on the opening prints, the overnight action, Christian kind of likes to gauge that action in the last, hour and a half of the day and set up his trades for the following day. So there's going to be
a lot of different tactics, a lot of different time frames you can trade, and don't, just get glued to one time frame. If you're finding that you're struggling day trading, maybe you got to extend that time frame a little bit. Maybe you're more of a swing trader. I've probably never been a great swing trader, so that's why maybe I'm more of a day trader, but you got to kind of find your sweet spot there. Long-term investing, completely different animal. Like I said, my portfolio just pretty much moves along with the overall market. Market down 1%.
No, you're high beta. You have some.
Yeah, I'm lower beta, so it moves less. I'm a lower beta portfolio because I'm conservative. So market goes up 1%, my portfolio goes up 0.5. Market goes down 1%, my portfolio goes down probably 0.5. So I've never sat there and actually analyzed. I probably should. But anyways, we've digressed significantly here from, I don't even know where we started this tangent from, but bring us back in, rein us in, Mr. Israel. Where do you want to go?
Well, we were talking about tech, and
the tech rack.
Just the tech rack from yesterday, and the FTC and DOJ kind of divvying up jurisdiction as far as who's going to investigate whom. And I mean, we talked Google, but did we talk about, Facebook, Amazon, that
Twitter?
Facebook was
You had to
awesome.
get out of that swing trade, right, Dennis? You're
Which
still
one?
not holding that thing, that
What
Twitter
stock?
swing trade?
Which stock?
Twitter swing trade?
I'm still in it, but it was kind of, I had sold over 3/4 of the position.
Okay.
I know it's straight down. I'm still in. I bought a 30, so I'm still up, but I don't know. I obviously should have sold it all. This is the environment we're in, though. It seems like even the stocks that report good earnings, and Twitter's earnings were good, give it long enough and they give it back. It's been a tough long-term environment. It's been a tough investing environment here. And you look at Twitter and you think, okay, well, I don't know. Do I want to sell it now? I mean, Nvidia was the one I really like, and I put that in the longer term portfolio not to look at it, but I'm like, that's unbelievable. It goes 150 up to almost $200. Now it's back down where it came from, 133. Gets interesting down here. I mean, I might add to it at 130 because you're coming at a level, the PE is not getting, starting to get a little more reasonable there too. I mean, stuff got overdone at the end of April and we kept running, but this May has been awful.
Let's take a quick look. I see some stocks going by in the chat, and then I write them down, and then we don't cover them. But I just want
let's get to them.
Like maybe every 5 minutes or so, or every 10 minutes. Baba, we got a question about Baba. Boy, oh boy.
I gave it all back. This is when I bought it around 140 and change, and it went to almost $200. I remember saying on the show that day, I was like, this has gone so far, I almost feel like I should, dump it. And I had lightened up on the way up a little bit, but I was like, I felt like I should almost get out, and that would have been the call. I could have been rebuying it right now for the same price I basically paid for it. So it did catch from Loop this last night. Baba did get a buy rating from Loop, so it's trading up a little bit there. Overall market helping it, but China was down last night, and China is actually trading in the red here. Something to consider right now if you're coming and buying this rally, because overseas China is not, it's not going up with it. So I think if they didn't get that buy from Loop, Bob, it could actually be red today.
Well, it's got to break its 11-day losing streak at some time. It did yesterday. It didn't have a 12-day losing streak.
Holy ugly.
Yeah, there's the good news on it. Trading up $1.19 here. Maybe if you're looking to get this, try and get it back at unchanged at 149.91. So that's a look at that. Also, boy, we got a lot of symbols coming in here.
Yeah.
Lucky's Kitchen. Have you been trading that at all, Dennis? That's the China coffee company, right?
You talking Luckin Coffee?
Luckin. What did I call it?
Chicken.
Oh, he said
okay. That's okay. We talk chicken a lot on the show.
kitchen. He said
I
kitchen.
said kitchen.
Oh, Lucky Chicken, Lucky
Whatever.
Lucky Coffee. Kramer has been dissing this one forever. It's had a nice little couple days rally here, but again, this thing 5 days ago was $15, now 21. I mean, if you're coming in here now, you're late to the party in an environment where they've been whacking everything. So, I mean, and one other one I was looking at, you remember that TIGR we were talking about like a couple months ago, and it kept going up, up, up? Do you remember that one?
Oh, wow. Yeah.
Look at that thing. A month and a half ago, it was $23. It's $4. It's $4. So as good as some of these IPOs have done, this one was doing very well on April 16th, which was literally just a month, just talking a month and a half ago. The thing made a high of $23.89. It has went down just continuously, basically since then, since that big red candle. And I don't know what that was. Maybe that was a reversal day, but that was it. And it never really gave you another shot to, a couple of little spots where it had little rallies in there. But I mean, this is $4 here now. You bought this at 23, forget about it. It ain't ever getting back there. So $4. Wow.
Okay. Also, why don't we just cover one more here?
We got
one that I'm stuck in and I may never get out of. Kraft Heinz had a good day yesterday. Holy
relatively speaking.
Yeah, look at that. That's off the mat, trading up and up. We have some news.
I have no idea what to say.
Upgrade. Didn't you get an upgrade yesterday?
Yeah, I think we did.
Yeah.
I think that helped it a bit. We got somebody that went to neutral on it, so that helped it a bit. But it's got a 5.61% dividend. Kramer said this perfectly last night on Mad Money. Somebody called in on Kraft Heinz and said it's dividend 5.61%. He's like, once they cut the dividend once, it's like free. They can do whatever they want. They've already cut it in half once. They can do it again. So they got debt problems. They have issues. We know that. Is ketchup going away? No. Is, cheese and Kraft dinner going away? Probably not, but they've got a lot of issues right now. So let's wait until, you start to form some type of a bottom or give me a chance to, level. But even when it was trying to form that bottom March, April, May, it resolved to the downside.
It did.
So the stock is just awful. I got lucky to get out of it in my longer term portfolio and never rebought it. I talked about rebuying it in the 30s. I never did. And it's been awful. Nothing short of awful, that stock.
Okay. Now we're going to let Spencer take it away.
All right. There wasn't anything particularly huge from this morning. I mean, the tech rep we discussed, we can do Uber. Yeah. I mentioned Uber at the top of the show. They had a couple.
Quiet period's over.
Yeah. One, the quiet period is over. And two, a headline from Reuters broke this morning that the IRS is looking into Uber's tax returns for 2013 and 2014. So there's that. But the quiet period's up for Uber. Here's what I've got this morning on the underwriters coming out on Uber. Oh man, a lot. So, and they're all, there was only one non-bot. They're all bullish except for one.
Because they're all the underwriters.
They're all bullish except for one. Citigroup is neutral. They are the only neutral. The other 15 or so are buys this morning.
So can you give us a few of them?
Okay.
Give us like the high ones, like who's like crazy out there.
Well, the highest price target I'm seeing is $80.
Who did that?
That's BTIG. 62 is second highest. That's at RBC Capital. 58 at Deutsche Bank, and 56 at Morgan. Those are the highest price targets that I'm seeing. Lowest price target, $45. That's Citi. They're neutral, like I said. A couple places are at 50. So, I mean, all the underwriters, which you can look up yourself: Barclays, Bank of America, Cowen, Oppenheimer, whatever.
Yeah.
All bullish.
I mean, that's typical. So the one thing that was interesting was, and I actually was there when this headline broke from the Newswire there around I'd say it was around 6:30 this morning, maybe. Give us that headline, Spencer, and I'll tell you, what I did on it.
Yeah, that the IRS is looking into Uber for their 2013 and 2014 tax.
Do you have the actual headline? You don't have to parse it.
I'm reading from reading the first sentence from the article. The IRS is currently looking into Uber Technologies tax returns for the 2013 and 2014, and the ride-hailing company said it expects unrecognized tax benefits to be reduced within the next year by at least $141 million.
Yeah. So on that headline there, it was trading up. It's actually above where it was then, but it was trading like 41.80, and I was like, that headline's bad. So I shorted at 41.60, and it tanked. It went all the way down to like 40.40. It started to stall out, so I was like, okay, that's good enough. So I ended up covering on the way back up. It was like 40.60 and 40.80. Thank goodness I did, because it's all the way back up to 42.25. So that's headline trading. I have the headline breaks, and I was like, well, that doesn't sound good. So, I'm not a tax guy or anything like that, but I can read that headline and say, well, that looks scary. And other people might interpret that as scary too. So anyway, I had a good trade. I made almost a point on it on the short side, and the thing's way back up. So obviously, I guess I should have turned around and went long it, but nobody's perfect. But there's some trades on the headline sometimes if you're quick.
Interesting chart. We talked about the mid-range on the session on earnings day, and it got quite below it. So if you were using that 40.5 level, you had to take about $1.50 worth of heat. But here you are trading 42.24 or 42. Yeah, right here, 33 up $1, nearly 3%. I'll keep an eye on this May 21st high of 42.24. Then things open up to 43.29. So there's a big gap in there. I think you'll find a high somewhere in between that area today. Don't know exactly where it's going to be, but I think you'll find some sellers here, especially some people that got stuffed at 45. That's the big number. That was the high on the IPO day. That was the pricing on it. So that's your major resistance. But 43.29, if you're really bullish, that'd be a great target today.
Did you see that? Spencer's bringing up the biggest headline of the day, I think, is that Jeopardy, what is Jeopardy James, or what's his name?
Yeah, James Holzhauer. I watched it last night. He got outplayed.
What time was it on? It's on at 7 to 7:30?
No, for us, it's on at 7:30. But for the East Coast, it's on at 7. I don't know where it is on the West Coast.
Anyways, I saw the headline break at like 7:25, and it said, spoiler alert, Jeopardy James is going to lose or whatever.
Yeah,
And it wasn't even over. The show wasn't over yet. So
well,
somebody
actually leaked. Well, it actually leaked yesterday morning, but
is that what it was?
but I refused to believe it until I watched it.
I heard he threw it.
No, he didn't
I
throw
heard
it.
that.
Yes,
That's
fans
what
of him
sources
trying to
are
say
telling
that.
Your sources don't know. They didn't watch.
It's
He
throwing
didn't throw
a
it.
game, and the
He
guy's
didn't throw
making millions. There's nobody throwing it. I read that too, Joel. People are crazy. That's just
No,
poor fans.
The annoying part is that he came in like 50 grand shy of their record
Yeah, I know.
for most money.
Yeah.
But he didn't throw it.
I didn't watch it. So did he, like, it was close the whole game, or was it like, how did it go down?
People are saying that because he was losing it going into Final Jeopardy, and
I saw that part. How did the actual, like, I guess they played really well. Apparently they only missed one question. The players only missed one question for the whole game or something.
That's true. They missed one question for the whole game.
Wow, these are really good players.
She outplayed him. She got the 2 daily doubles in Double Jeopardy.
It's a little bit of luck. If you're all that skilled and you can do the buzzer thing, then it's just a matter who gets the daily doubles, right?
Yeah, and she got them, and she got them both right.
And did she bet it all?
Only the first time.
First time she bet it all.
And that put her ahead.
Yeah.
And got the second one, and she stayed ahead.
Yeah.
And she was winning. And then people are saying that he threw it because he didn't bet every penny going into Final Jeopardy, but he bet enough to win if she got it wrong, which she did not. So,
yeah. Right. So I mean, that's just dead. Like when you're behind in Final Jeopardy, if the other guy gets it right,
exactly, you're done. So
he's coming back from that.
You're not. So he.
I heard he missed his daughter and that he wanted it.
What are you?
I
just telling you what I heard.
People. Yeah, I'll just give up millions and millions
2 months ago
because craziness, crazy.
All right, moving on.
Joel, I was reading some of this stuff too. So what's going on? Getting picked off again. Stop going up. This market just keeps picking me off.
Not seeing any headlines here.
I don't know. I just sold a bunch of applied materials, a couple other stocks.
All right. Let's move on here.
Not a bunch, a little bit.
There are some earnings that I want to get to. BOX being the most notable one from yesterday. They had earnings after the close, and their Q1 EPS was a 3-cent loss versus a 5-cent loss estimate. Sales beat 162 versus 161 $1 million. EPS guidance they gave was in line. Sales guidance that they gave was in line for the current quarter and for the fiscal year. Both the EPS and sales guidance were in line, or just about in line.
So anyways, oil just popped up a little bit there too. But okay, so going back to BOX, stock is weak going into it, but not a good report at all.
Real
stock last night, ton of stockers when it's under $15. I mean, you look at this one, and is the story over? Like, valuation was an issue here. How much money did they lose? They make money? They lose money?
They lost 3 cents a share.
Have they ever made money before?
Oh, let's check.
When growth starts slowing, it starts to matter if you're making money or not.
They have made money. They have made money before, yes.
Okay, anyways, you do have I don't know what to say. The
hard.
chart's broken. Everything's broken.
Nothing here.
Why be a hero and try to call the bottom?
Yeah, I'm looking at, I guess if you wanted to be an optimist, you'd say, well, we made a low at 14.51 and we're holding, right? And we're back over $15. That's if you're an optimist. If you're a pessimist and you look on the daily charts, the monthly charts, you're saying, hey, it's come down this far, this fast. Why don't I just wait for under $14? I see 3 monthly lows, 13.62, 13.56, 13.90. Don't think we see that today, but if you're looking for a low ball bid out there, I'd just throw it out at 14 and say, what the heck, come and get me. And then coming back on the upside, someone's keeping a lid on this, not a major lid. 15.20 has been the high since you made the pre-market low.
People have lost a lot of money trying to call the bottom, and we've seen this again and again. And sometimes it does. Sometimes they bounce back. But more often than not in this earnings season, when you've disappointed, a lot of the stocks have continued to leak lower after those disappointments. When you talked about Google disappointed the street. It's been straight down. I mean, a little bit of capitulation, maybe downside capitulation yesterday with the headline there. But, really, when you just analyze it, you were analyzing on Stocks and Jocks this morning. I was listening to you, and you're saying that really what started this was the disappointing earnings report, and it's pretty much had sellers ever since. So when you disappoint, it takes a while. You don't have another quarter for 3 months to make up for it there. And typically people move on to other stuff. So then you have other people who are saying, okay, I've taken enough heat. I'm getting out of here. So it's difficult when you miss the quarter to just bounce back, unless you've been a stock and been a significant uptrend, and that's just pulling you back to trend. But when you're in these stocks that are, kind of just meandering or sideways or in a downtrend and they disappoint, sometimes it continues to be ugly for a while.
And you could keep yourself out of trades. I mean, not necessarily, going in, picking a bottom or whatever. But if you looked at Google after that report, you said, wow, that's a gap down. You look at that price action from that day and you're like, okay, we get back over 1190 and change, I want back in. Maybe we'll fill the gap. And it just never did. And of course, the news yesterday took it down to 10.25. Just one other stock. I mean, is Triple M done going down here?
That's maybe it's slowed down at least. Well, not really. We're one day. One day doesn't make a bottom. So, I mean, this is the poster child for what we were just saying. Stock disappointed the street. It comes out, opens the next morning at 198, and here we are a month later at 160. You disappoint, you continue to leak. I mean, they've all done the same thing. I know some of them have been in my portfolio. The Intel, I was lucky to get out of most of it there because I was just done with it, but it did the same thing. It's tough. When you disappoint the street, they punish you for a long time.
RNH in the pre-market chat is looking at
Is that Ryan Nugent-Hopkins?
Joel
Joel doesn't know who Ryan Nugent-Hopkins is.
No.
He's an actor.
Oh.
What?
He's an activist.
No, he's a hockey player.
Oilers. Ryan Nugent-Hopkins, number 93.
I'm surprised you knew that.
He knows. Spencer Falls hockey.
No, I
see RNH, I automatically think of Ryan Nugent-Hopkins. Maybe he's a Ryan Nugent-Hopkins fan.
Oh, anyway,
okay.
RNH.
Okay. All right. Anyways, it's getting a pop. It sure loves that $52 area. 51.72. I know I've been mentioning this for a while. It got down to 52.04.
We're talking CVS here.
CVS.
Yeah. I'm lost. He's lost me.
We're talking CVS, Dennis. CVS.
Where did we go to CVS?
That's what RNH in the chat has.
Oh, gotcha. Okay.
Yes.
Thanks, RNH.
Yes. So, okay, we're there.
Okay. It is moving up. It's up $1.21. Do we have news on it?
On CVS? Oh, I haven't seen it.
That's a big move. Yeah, you're right. That's a big move for CVS.
Oh, yeah. Wow. Look at that. I mean, that came by and I missed it. They reaffirmed their preliminary guidance for the year, their adjusted EPS guidance in line, their sales guidance in line, and they even gave some fiscal year 20 EPS guidance, which I guess that's all in line. So they just reaffirmed a bunch of inline numbers here.
You've had a tradable bottom here. The low of the move, let's call it 51.72. Yeah, so you give yourself, if you're buying, I don't know if I'm chasing up a buck because I don't like chasing anything in this market, but if it pulls back and you're leaning on those lows, I mean, give it $51. Starts making new lows, you got to go. That's all there is to it. But, here you can't, it's been trying to form a bottom for 2 months, has been going down with the overall market. That's a good sign. So the relative strength has been better here lately. So, you know what, if you're long this thing, I can't argue with you here at this point.
Yeah, trading at the highs of the pre-market session, 54.55. Let's see what we got on the dailies here. 54.50. That's my level. That was your high on May 13th. Let's get a hold above that. Take a stab at 55.62. That's a big move. But if you're thinking that that's going to pull up the whole sector. Look at WBA, new low for the move on Friday, 49.31, 49.52 yesterday, trading up 61 cents. But quiet consolidation accumulation period here. We'll see if we found a bottom in either of those stocks.
Lots of other stocks coming from the chat here now. Let's go to Tiffany's, though, because it was the big one that reported here this morning. I was actually short going into this report. The reason was, and sometimes you just do them, because with 20 minutes to go last night in the after-hour session, somebody bid this thing up at like 93.75. I was like, they're going to give me a 3.5 point lead. I was like, I'll take it. So I did, took it through the report. Report was disappointing. I've covered it already, so the trade's over. I would have thought it would get hit harder. And actually, I did get some covered at 85 this morning, and then I covered the rest at 87. I thought it was going to get hit harder just because Tiffany, it didn't sound that good. Anyways, give us the numbers, Spencer.
And the numbers for Tiffany, Q1 EPS, $1.03, beat by a penny. Sales a little bit light, or mostly in line at $1.03 billion. Comps were down 5%.
Yeah.
Though they did raise their quarterly dividend from 55 cents to 58 cents a share. But they blamed Forex headwinds and lower worldwide spending which they attributed to foreign tourists. Those are what they blamed their weak comps on.
It wasn't a great report. I will say Tiffany's reported on the right day, and you can say, what are you talking about? It's down 3%. But I think if they reported this on a day where the S&Ps are getting whacked, this thing could be down $8 or $10. But it's, it's kind of like a buy everything market here today, so they're not hitting anything that hard. It initially went down into the 84 handle on the initial report because I was watching it because I was short it. And when you're short something, this is just a lesson. When you're taking something through earnings, you got to first of all be aware, what the expected move is or what it can move. And we know Tiffany can sometimes move $7, $8, $9 on a report. It can move. So you got to kind of know your stock. Then secondly is don't just have your orders sitting out there and be like, just because I short 93.75 doesn't mean I'm going to cover it at 90 and be happy. I'm not going to have my orders sitting out there to get picked off if the report's bad. If you're taking it through the report, you need to make what it's worth, because if you're taking stocks through reports and you're always getting out of the winners too fast and not cutting the losers, you're going to lose money on that strategy. So the way I trade it is I'm short into the report. Okay, I'm not going to be even out there. Maybe if it was like really getting ridiculous, like I could maybe bid like 80 or something, but I don't want to be out there until I see the news. Then I interpret it myself. I'm like, okay, it wasn't a good quarter, so it should be down. And then you think, okay, well, what's the expectations here? What can it move? We are up significantly, so that's going to take some off of it. But you think, I had in my head, probably $5 or $6. And it got down to 84, 85 area and then started to stall out. I was like, okay, I'm going to cover some. I got some covered at 85, but then it starts to get tricky and 86 bit. So then I eventually had to cover the rest of 87. But I mean, the market here is dictating this to a certain extent too. We're very strong in the overall market, which is helping all stocks here this morning.
So 8 points, you got over 8 points on part of that? That's crazy.
Yeah.
Wow.
Yeah, but I'm taking a huge risk. I mean, I shorted up 3.5 because they gave me a lead. I would not normally, I wouldn't be like, oh, I'm going to short the close of 90.17 because I think Tiffany's going to have a bad report. I'm like, okay, it's up $3.75. Even if it has a good report, maybe it only goes up $6 or $7. So I like the risk reward at that point. Somebody was very nervous. And a lot of times these guys are right. And I think sometimes it's even insiders that somehow know, we've talked about that after hours. These guys are bidding it up, and then the company beats. In this case, this person didn't know anything. We're just nervous. But if they're bidding it up $3.5 after hours, and it's just like, it's
a retail stock.
Yeah. It's giving you enough lead that I think I'm going to make money in the long run. Maybe I don't, maybe it blows it away. Maybe it goes up 7 or 8. I lose on this specific trade. But I think if I do that trade 100 times, I think I make money 60 or 70% of the time, just because it's giving me enough leads. So it's just like when you're trading, as much as I'm trading, as much as everybody, if you're a full-time trader, it's just about, doing stuff over and over again. And in the long run, I should make money with that trade. They give me a $3.70 or $3.50 lead going into a report. I'll take it.
Okay. All right. We imbalances. Are we loaded with buying balances?
Nothing. They're small. And this is, again, the same. We've seen this again and again and again right now. The volatility is too high. Institutions do not want to show their orders because they do not want traders coming in and stepping in front of them and seeing, like, if I got 100,000 to sell right now and show it, they're going to start whacking in the pre-market. So they're not showing their hands at all. When volatility is lower, they show their hands a little bit more. But right now, if something showed 100,000 to sell, there's going to be other traders, or 100,000 to buy, there's going to be other traders going to buy it ahead. So they're holding the orders very close. They typically don't come in there until like a few seconds or, maybe a minute or two before the open. So I don't see anything really of note. GE is the sell balance every day. It's 83,000 shares, but that's nothing for GE. VEEV, 32,000 to sell. I'm reaching here. There's just not a lot of buys or selling balances here this morning. Pretty small.
All right, 8:34. I'm going to bring today's guest on about a minute early. Nick Chahine, author of Create Income with Option Spreads and sellspreads.com, joins the show every other Tuesday. And let me make sure he is here. Nick,
I am.
You're with us. How's it going?
Pretty good. I'm a little under the weather, so I might sound a little funny.
Uh-oh.
That's okay.
That's not good.
So
right.
how are we enjoying this ride with how the U.S. regulators are piling in on the U.S. companies? Pretty fun.
Trading is good. Investing is bad. That's how we're enjoying it. The trading has been excellent. The investment portfolio, the long-term retirement account, doesn't look as good. Do you have like a long-term, or do you do like a retirement account where you stick some stocks in that you believe in long-term? Or are you all trading?
I'm mostly all trading, and I do long-term via selling long-term puts, but it's slightly different than your strategy there, but which I love the way you do it, because then you can segment the decision-making process completely.
I try to, but you know what? I don't know if I'm a great investor. I know I'm a pretty good trader. I've made my whole living and all my net worth from trading. The investing is still like, I think, it works. Like if the market goes up in the long run, you got to hope it works. But
yeah.
I don't know. And on months like May, you think, man, I'm doing something wrong, because the amount of money I'm making trading is not making up for what my investments are going down.
Right, but if you don't look at it, except
try not to,
as long as it's not retail, I guess, or some banking stuff, because some things did not work out for the long term.
But one stock, and I know for sure you mentioned this, you didn't buy it for yourself, but you bought it for your son, right? You bought
Uber.
Lyft, or Uber.
Yeah, Uber.
Okay. Talk to us about that trade.
Well, it wasn't so much of a trade, but it was a silly thesis that it's so ubiquitous that they're going to have to make it work one way or another. So they're going to be basically everywhere, and they can push whatever they want, whether rides, scooters, delivering food, whatever, coffee, pizza, anything. It's the fact that they are there and they have the opportunity to do business with the people. So it was a silly thesis that's long term. I'm not even looked at it. I think I bought it around the 43. I'm not sure, thereabouts. So I'm down a little bit in the stock, but I'm not even looking at it because it's a decision for the long term. This is either will be an Amazon-like stock or a flop. So it's a $40 worth the effort.
That's the hardest part, though, like with that I struggle with too, is as a trader who's looking at the markets continuously, you kind of know what you own, and it's so hard to not just go. And sometimes, and sometimes I'm guilty of it too, like get nervous and sell out of something maybe you shouldn't be selling out of. So how to separate that? Like I've struggled with that for 20 years, how to separate the investing from the trading, and it's tricky. You have any tips for me?
No, because it's a sentimental thing. It's a human thing. Like the FOMO, it's real. That's why I say you have to set your rules. And if you have them set on a piece of paper, then you stick by them. So if this, then do that, almost like machines. And, yesterday we saw some machines breaking down because machine trading breaking down, I should say, throughout the day, because we had a few headlines that canceled each other out. For example, usually when the bond market rallies, the stocks fall. And we had a headline about Bullard being bullish stocks, basically by saying he expects rate cuts or something like that. And then suddenly the stocks bounced. And then immediately we got the Apple hit. So at that point in time, stocks and bonds should have rallied at the same time because of the rate cut blurb. And then the Apple news hit and the bonds wanted to rally because of fear. And it just broke the whole thing down. So for you, set your rules and stick by them, regardless of how you feel.
Need to get those rules written down. But
they have to be simple.
I'm very disorganized.
But they have to be simple.
Yeah. Don't look at the account. That number one rule. Stop looking at it.
As often.
As often. True. You have to look at it every once in a while.
Maybe like quarterly. Like I've scaled it back on
you're a long-term investor here, Mr. Israel.
I know. And I was gonna ask Nick, how do you not look? But I've scaled back. I look now. I was looking like every week or so, and now now I don't even do every month. Now I'm like
you look a lot less when the market's going down.
You look.
But it's still going up for me because like I'm contributing more, right? So like my balance is still going up, even if the market's going down. But so I just decided once a quarter I think is good. So at the end of the quarter, beginning of the quarter, so I just try to put it out of my head between now and then.
So, well, you have to look, but you don't have to act. If you can restrict yourself from acting. Yesterday, I fell for it. So I had an iron condor yesterday that was perfect on the SPY, expiring yesterday, 274 on the low end and like 279 on the upper end. Obviously, the upper end, I didn't worry about it. So I was long the SPY at 274. As long as it closed above it, I made 100% of my profit. So I said to myself, okay, the 275 is a good support. The 274 is also a good support. Don't look at it. So, accept the maximum loss. Don't look at it. And I looked at it and they shook me out.
tough mood yesterday.
They shook me out at break even on the lower end, so I still made 50% of max gains, but I would have made the whole trade and it was beautiful. But they shook me out. I got upset at that. I looked and acted. I shouldn't have.
Let's cover some stocks here, Nick. And you're good with the charts here. We'll have Spencer bring up the charts. We'll start with a tough one. Beyond Meat, BYND.
When they run out of meat, I'll start buying Beyond Meat. So they
$5 again.
Well, they report Friday.
Stock's a machine. I bought this last night, overnight at like 90. It was down when the market was up. I was like, I'll just buy it because it's probably going to go up tomorrow. I bought like 90. That's the great way to go about it. I bought like 95.50. And I sold that thing this morning. I was trading the 98 handle. It's 101. I sold way too soon. Never sell.
Well, that's the thing. If you believe in it, it's way too young to trade, I think. I mean, either buy it and hold it, or if you get a big bounce, you get rid of it for the short term. There's not much to be said from the chart itself. It's the sentiment. People love it. And it's caught the eye of investors. And nobody's asked me about it at the gym. That's the sign that we've hit a top.
That is the sign you hit the top.
Because that happened in Bitcoin too. When my fighting coach goes, he handed me cash. Go buy me some what was it? Ripple. I was like, okay, and that marked the top week for that crypto. So nobody asked me about it at the gym yet. So I think why would you want to short it? It's unless you're a really fast trader with really good discipline, it's hard to short because it's one of those too high to chase really for me and too hot to short. But if somebody can trade it, good for them. We will see what they deliver in the earnings. I think the thesis for it is pretty wide, kind of like how Tesla started and kind of like how Uber is now, and Lyft. It's so general and so big addressable market that it's hard to short from a concept for too long.
Right. If they get just a small, not everyone has to be eating these, eating it. But if you just think about a conversion rate and, 1 or 2%, it's huge. It's tough. I shorted it once. I got out alive and I've just been leaving. Apple getting interesting to you down here. Just more than filled the gap from earnings. Just a lot of news on Apple. Big down day yesterday. What are you thinking, Nick? Here you were looking at lower prices here, but man, 215 to 175.
Yeah. I'm not a fan of what Tim Cook is doing, obviously, but the stock is a decent bet, but it's also a bet on the whole economy too. So my bet on the macro is that once we lost the footing somewhere around 2,800, I had a few lines that are there. The 2688, 2645, 44 zone was the measured move on the S&P with an interim stop around 2740, 2730. And that stop could be the bottom for the next bounce, or we could bounce here and revert to that lower, but that will be the bounce. So I'm ready to buy, and I could sell some put spreads in Apple right now, and I think I'd be a winner. I can say the same about all the mega caps that got hit yesterday. The Google 800 put paid $20 for next year, like say March. So would you take $20 per contract right now to buy Google at 800? That's basically what you're saying. Somebody will pay you $20 as of yesterday for the privilege of you taking their stock off their hands at $800.
I've got this in my long-term portfolio, and I've said all along that I think still Google is eventually the most valuable company in the world. I just think everything that they're doing, I believe in the story. So that's a trade. Like if I wasn't already in Google, that's something I'd probably be interested in.
I'll throw in Amazon there, and I think it has a higher odds of that. That's my opinion.
They're taking over the world, Amazon. Google's in their businesses. They're obviously doing a lot in tech. Amazon's just trying to go into every business.
So from a trading perspective, I missed your show today. I want to bring up the bonds. And that's the bigger problem. That's what happened to the stock market. If you turn off all the news, what happened is that bonds technically broke out.
Yeah.
But also something major happened this week. They hit a level from November of 2016.
I see it.
That's the ledge from which they fell. Something kind of important happened that month. So this is the Trump bump that completely priced out for the bond market. I would be shocked if they sliced through it. So if bonds are...
Nick, are we going in, I mean, this full-fledged recession here?
No, I'm arguing for a bounce.
I know. I agree. I just don't, I mean, just using the eyeball test here, I don't know. What am I missing? I mean, the Fed funds rate is factoring in a couple cuts here. The world's going to hell in the handbasket if you ask the bond market here. I don't know. Are these banks finally going to find a bottom here? I just don't see rates. I don't see them going up. I don't see them going down. I've been saying that for a while, but it's hard to ignore this move in the TLT.
It's hard to ignore, but it was technical. And, I noted it and I fought it for a little bit. I lost some money there, but I'm still short it. So I'll eventually win over it. And the TLT, I think, has hit a major hurdle. And the bulls in the TLT, which means the bears and the stocks, have onus on them is to overcome this level. It's a very tough level, in my opinion. So technically, a few days ago, probably, let's see here, May 22nd, 23rd, we had a really tight situation in the TLT, technically speaking. We had higher lows bumping up against the neckline around 126 and change. And it was either going to break down or break out, and it broke out in a big way.
How about Verizon VZ here? Got hit on some news. I don't know if it was Trump tweets or whatever.
I hit on Amazon news.
Yeah, the Amazon. I'm sorry. Yeah. What about Verizon here? That big run up, big drop, unusual move for it. What are you looking at in VZ?
This is a level that goes back to 1999, if not older, for Verizon. So this is an important level. And I think will eventually be some sort of support, shorter term on a daily. The whole zone anywhere below 54 has history of bounces, at least for the last year. But like I said, it's a zone that goes back since before the 2000s. So VZ should have support short of another headline. I think they're pretty well managed. They have a nice aura around them. Everybody that uses them that I know loves it and swears by it, kind of like an Apple thing where they think they're getting a better deal than everybody else. So if you see it had a head and shoulder back then that didn't break down. So support around here. It has a couple of ledges, one at 54 and one at 52 and almost 53, 52.80, 52.90. So, and the red zone extends to that decade-long thing, more than that. So all around, it needs incremental bad news to lose this support, I think.
You selling any puts in FDX, Federal Express?
No, I'm cursed with that one and Caterpillar, because even though I get it right, I find it hard to make money. Plus FDX has a lot of issues. And it now sports a massive head and shoulder. So if it doesn't bounce here, it could go below 110. I'm not calling for it, but technically this is an important level for it to hold. I'm in the weekly and I see this level play out on the weekly. Let me see if I go to a monthly chart. So a monthly chart shows it a little bit better, and it shows the potential downside. I'm not calling for it because it looks like ridiculously low because of history and how long it's been since it's been down there. But apparently that they have problems. So I'm not sure what's going to happen there, politically speaking, with the Huawei thing, and also from the competition side on Amazon and any other modes of delivery.
All right, we'll give you one easy one, and then I think I got one other one for you here. Jared wants to know what you think of U.S. Steel, who was the recipient of a downgrade today here from Goldman Sachs. Are you looking at X at all?
So you're telling me it's down today?
Not much. You know what?
Good
It's not down much. It's only down 10 cents. So they're starting to shrug these downgrades off. If that happens a month ago, it's down $1. But again, market help.
Too many more bucks to go, Dennis. It's at 12.
I know. It's been a disaster.
Well, from a PE perspective, it's pretty cheap, and price to sales is really low. So either there's something going on that I don't know about, but it is, I'm not an expert on the stock itself, but technically speaking, I mean, if I'm looking on a weekly basis, I have to go back to January of 2016 maybe to see levels lower than that. And back then there was an emphatic move in February that said, you know what, we're completely mispriced here. Let's go. So now this one would have looked like FedEx looks now back in April. It had a big head and shoulder-ish inverse cup and whatever, a bearish neckline that broke down. And on a weekly basis, and if I would ask then, I would say if they lose this, they could go down to like 10 or 12. But I would have said it wouldn't be my scenario because it seems pretty low, but there it is. So it could be a measured move. How far down they take it, I'm not sure. The technical target is a lot lower than this, but I doubt that it goes there. But now,
gold. How about gold, Nick?
Okay, so gold, I was looking at it yesterday. It broke out in a big way. If I'm long, I'll probably ride it a little bit, but also I was short the dollar and made some money on that, and that helps gold. But a few months ago, I think in March, it had a spike that ended about here, so be careful. And also I would ping it against the February high. How it behaves against those two prior fail levels is important. Otherwise, it looks like an inverse head and shoulders, and it has a lot more to go. If it can breach the next few levels, it could go to 135 on the GLD, for example.
All right, we're even on the line with Nick Chahine, author of Create Income with Option Spreads and sellspreads.com. He joins us every other Tuesday. Nick, I hope you feel better in time for next time we talk to you, but feel better and have a good rest of the week.
Thank you. I appreciate it. Looking forward to it.
All right. 8. What time is it now? 8 something here, Joel. Well, 8:52.
8:52 here in the Motor City. Sunny day in the Motor City, that is. We're just climbing. We are continuing to climb here. We're up 20 handles at 27.69.50. Boom, boom, boom. I don't know. I don't have anything in here. Friday's high, interday high was right here at 69.50, but Friday's actual high, the true high, was way up at 27.92. So maybe use your daily target. We got about a 40-point range, average 9-day average range. So you're super bullish today. Maybe you look for 27.84, but who knows?
Nobody can call this market right now because you don't know what the next headline's going to be. There's headlines happening continuously. And we got 2 trade wars going on. If there's a hope, there was, the headline, overnight was that the Senate was going to try to block some of these tariffs or something. Was that was the overall catalyst, I believe, wasn't it, Mr. Israel?
Yeah, something like that.
Yeah. I mean, there's just so
honestly,
many headlines.
I can't even keep them straight at this point.
There's so many headlines.
Yep.
It's anybody who says they can call this market from here, it's going to be luck if you get it right. Because you don't know what that next headline is going to be. Trump tweets something out that, hey, we look like, we're getting somewhere here. This market will rip higher. If Trump tweets out, we're grounded in, and China, blah, blah, blah. I mean, then it's going to go lower. It's all just dependent on these trade wars. It's dependent on the next headline. It's a headline-driven market. So trade what you have. But, calling this market out more than a few minutes is very difficult right now. Yeah, there's little technical setups. Yes, day trading is still viable here. It's the best day trading environment you can get because it's going to be flow, there's going to be momentum, but don't get married to any positions because you don't know what that next headline is going to be.
You remember what Eddie Franco used to say? He used to say that you can only predict the market 7 minutes out.
Yeah, and I would move on almost 7 seconds out at this point in time. So Eddie was talking from 15 years ago there. So the market's changed a lot, but I feel like I do a pretty good 7 seconds out. I don't know if I can do 7 minutes out. I definitely can't do 7 hours out, not in this environment. Sometimes you can do, in the absence of news, we always say technicals work very, very well. And you can, look at the chart and say, okay, it's a nice setup. I think this is going to go. And, in some cases it does. But when you've got so many headlines, everything's out the window. It's all dependent on the next headline. So you can have the prettiest setup in the world. And all of a sudden, if this trade war starts to get uglier and there's a tweet or there's, somebody says something, the market's going down no matter what it looks like. So you just have to be cautious. I think eventually, if you're a long-term investor here, there's some good deals out there right now. Even Nvidia, I mean, it's $133 now. It's been straight down from 109. There's nothing been smoother than that. Eventually, Nvidia is going to be up $10 in one day just on nothing because it's so oversold. So it's same thing like we were talking on the S&Ps when I predicted the 1,000 Dow point rally back in December. Some stocks are just really oversold here right now. But, are we, there's also some stocks that have held up very well. We haven't seen anything about like December where they were selling everything. I mean, Coca-Cola made new highs yesterday on the move. So they are still finding things. They're still rotating around. And, despite the weakness in certain issues, there's still rotation here that's keeping this market afloat. So I haven't seen anything like overall capitulation in this overall market here right now to make me think that there's a big rally imminent. But again, it's headline driven. The next headline will dictate the next move.
All right, we're getting a couple of requests here for Salesforce.com CRM reports
tonight.
Close. Well, you know which way the street was leading as of yesterday. You lost that major support. You've just been hanging in there at 151 and change. You broke down yesterday, getting a couple bucks back today. Tough one to call ahead of the report.
Oh, impossible. Yeah. I don't know what the expected move is. You guys could go look at the options there, but I'm sure it's $6 or $7 probably for fun. So you look here and you got to think in this scenario, the stock is so weak, it's getting a little bounce back. If they blow it away, the stock can go higher and raise guidance, but it all depends on, how the market's looking too. So, tonight, how's the market? What's the market done? Has we been strong? Are we strong going in? Are they starting to like stocks again? Or do we give this back? It's all going to be a lot of market sentiment involved in this specific report as well. And, we don't know what the market's going to do in the next 8 hours here. By 4 o'clock, this market could be red. This market could be big green. If it's big green, then CRM is going to be a little more loved. If the market turns around and gives this back, any spike on CRM is probably going to get sold. So a lot of this is going to be market dependent. $8.11 Spice is saying the move.
All right, a couple ratings before we wrap up for today. There are some interesting ones. We had Texas Roadhouse, TXRH, getting their 4th upgrade of the past 4 weeks here. Calling a bottom is Maxim Group, upgrading them to buy this morning.
They've had 4 upgrades in the past week, and the stock chart looks like that?
No, in the past 4 weeks, I said.
Still, the stock chart looks like that. I would have expected the stock chart to look a lot better. This is not a stock that I trade hardly at all, so I don't know much about this one. Up on the upgrade, stock chart still ugly. 56 is major resistance.
Yeah, I got a little gap fill to go in here at 54.38. So if you're looking for that gap fill, you're getting it today. And Dennis mentioned the only daily high in there is 56, and then above that 57. Then big old gap to fill here. But I don't think I've ever been at a Texas Roadhouse.
I haven't.
No, of course not. They don't.
Sounds like it would be good though.
They don't have them in Canada. How can they have a Texas Roadhouse in Canada?
Come on. I don't know if they have them in Canada or not, but it's not like I don't travel to the States here.
One more of note this morning, Fizz.
This is
now Joel's favorite stock at one time.
This is now the second day in a row with an upgrade. Yesterday was Maxim Group. Today is UBS, both to neutral. Same story. Ugly chart, some upgrade.
It's fizzed out. I beat you to it, Joel. It's definitely fizzed out. 120. A year ago, we were looking in September at 127. It's $46. Story's over here. I mean, it's ugly. Yes, it's going to have bounces. You get up near 50, you probably have sellers there too. So this trend is definitely not your friend.
Trading up 57 cents, not much volume. If you're looking for a daily high to lean on, 49.61. That's your 3-day high. That's still a couple bucks away. So that would be a target for me. Swing trade leaning on the low here at 44.60. That was the low of the move here. And I guess instead of buying weekly 100 puts at some point during late 2018, I guess I should have just bought the leaps and would have been in a lot better shape there. But on the rebound here, remember when the CEO attacked the press on that? I think that was like 25, 30 points ago when he said, you're making my stock go down or something. If that's anything to get the attention of the bears. I don't know what is 27.70. That stands as your pre-market high, backed off to 68.25. So we'll be looking at that pre-market high as a potential area of resistance. Be careful, folks. Resistance is thin in the 27.70 handle. Now on a pullback, if you're looking for mid-range, you got to wait for 27.57, and who knows?
All right, we gave 25 numbers on that one, so we only got to fly through a couple more here. We're going to give Joel 10 seconds on each one. Go. What are the stocks?
Just from anywhere, because I got a few more on my list.
Yeah, go.
Cracker
All right.
Barrel.
Okay, this one just
This is
dropped.
going to be like that. What is it called?
All right.
Lightning round. For
Just
ripping
drop
off
in the chat.
CNBC's Mad Money. This is the pre-market prep lightning round.
All right, CBRL was just dropped in the chat. Go.
Earnings.
Earnings and a $3 special dividend. Wow. Pre-market high 71.75.
Whoa,
Yeah.
that tells you everything right there. That was right where the old resistance was, and it's given 2/3 of it back.
Yeah. So you're going to have to pick a spot ahead of that. I'll give that spot at I even call 167.15 resistance. There's your one number on the upside.
All right, take two. One of the few bears has thrown in the towel. BMO Capital upgrading them from underperform to neutral this morning.
I like this stock at best of breed. I don't own it. Wish I did. Activision I do own, and it's been a dog compared to this one. So I think take two is best of breed. I like it on pullbacks.
All about 109.50 on the upside resistance. That's a pair of highs from the middle of May.
All right, Docusign from the chat. DOCU.
Ugly.
What happened
Yesterday? Any type of rally, you got some people caught in this thing now. So when you see candles like this, it makes me think there's more pain ahead. So take out 50, slippery slope down to 45. I don't know if this is due to report. I don't know when this reports. That can change things, but I think you up to 52, 53. I think you got willing sellers. Path of least resistance. I think obviously we're going to be up here today, but I think I'm a seller of rallies in OCU.
DocU is Thursday after the bell.
Oh, well, it's coming up, so that changes things. I mean, you can trade it, and sometimes you got to run up ahead of the earnings. So strike everything I just said because the earnings is coming up, and sometimes these things can, be strong ahead of the report. But in this market, there's nervous Nellies ahead of those reports lately. We saw CRM yesterday too. So I'm still, I'll say it again. DOCU, I think I'm a seller of rallies.
Boom. AVLR. This is our last one for the day for Ed Parker. Down another $1.02. Ed, falling into that gap. I think I would just be patient and maybe try and pick this up in the lower 60 handle, 60.27. I don't see any reason.
Nothing in there.
Yeah, nothing in there. So, all right, Spencer.
All right. Joel, Dennis, and myself will be at the Benzinga Trading Summit June 20th at the Sheraton Times Square in New York City. To learn more, go to bzprofit.com and enter the promo code PMP50. That'll get you 50% off any ticket, including the tickets to the exclusive trading lounge.
Which we're up to close. I think it's close to 60 people in that trading lounge.
All right.
It's going to be
how many tickets how many did they hold in that room?
Not many. I don't know the number, but they're capping it at a certain amount, and I don't think we're at the million, but we're getting close. So the trading lounge is different from the general admission, but same promo code will get you half off tickets to that or to the general conference if that's your thing. So PMP50, all caps, bzprofit.com to learn more about the event. Thanks to today's guest, Nick Chahine. Thanks to all of you in our chats. Please remember all the information on our show is for informational purposes only and not meant to be investing advice. If you missed any part of our show today, catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, Google Podcasts, or just rewatch the show on YouTube. And on that note, we're done here. So have a good day, everyone. We'll see you on Wednesday.